Hello, this is the price action for yesterday, the Euro USD 3-minute chart. We had a bear range and a breakout. Let's go to the 15-minute chart to see how this formed. So the day prior, we have spiked up quite strongly, but we have to remember this blue channel has already had an overshoot. It's already gone back down and it's retesting the high again. So we are in a trading range, big up, big down, big up. We're probably going down again. And we create this little channel here. It started yesterday. And we hit on the third push, and we double top there and we spike down. We're normally expecting 2 legs back or even a reversal attempt at this point, and we get that. So we spike on down there, we overshoot this micro channel line, and we create this little rangy pocket. So by this stage, you should be putting your bigger channel on there and understanding that, oh, we're probably going to get potentially 3 pushes down on this channel. And you're probably going to be in there for the session, the London session at this stage. Anyway, we end up shooting down quite strongly again, and we hit into the other side of the channel, and we are overshooting there, and we create this other little rangy pocket, and then we finally break out of there and we stay in this range, and this still seems to be in play, this line, so we'll just leave that in there. Let's go back up to go down to the 3-minute chart and look at the trades. So of course, at the start of the night, you should already have this pink channel on there just by looking at your 15-minute time frame. And then before the start of the night, you should be drawing in, getting ready for the night, and just looking for how the channels are forming and seeing the ranges and getting ready to trade these smaller ranges, as that's what we're doing. So at the start of the night, if you saw this, there's a very big up and a very big down. So you're automatically thinking trading range open today. So you draw on your range from the low to the high, and you just leave it. You don't adjust it, you just keep it as is. And you see this clear overshoot just before the open. So again, you're just drawing your range from that micro channel line overshoot all the way down to the low. It's trying to break out on the opposite side of a channel. That's a rare occurrence. So we're looking to go long here. We're hoping that it breaks out this way, of course. And we're probably going to get vacuum tested back up to at least here because of this range, but we're also got this bigger range, so potentially we're going to head all the way up here, and that's what we do. But you're waiting for the failure here, so you do see it fail here, tries to break out of this range, fails, then it heads up again, it tries to go down again and fails here, so it's a failed second entry short. You can go long there. We're inside a bigger range. We're expecting it to go all the way to the top, and it does exactly that. But you've got to be quick to see this. Whenever you see a big up and a big down, or a big down and a big up, you're probably going to create a trading range sideways. And also when you see an overshoot, you're probably going to be in a trading range. That's why we don't go short on trading ranges, because on overshoots, because they're going to pull back up. So we can use that to our advantage. Anyway, we head on up here, we channel up here. It's too strong to go short on the first attempt down, but this second attempt down, there's your swing trade for the night. So it happens not that late into the night. We hit along the channel line. It's a clear failure there. We can see it's on the retest of the high again, and it completely fails. So you just drop your limit order in there. So once this bar breaks below this bar, you're really looking to get your limit order in there, and then you're hoping it comes back and gets there. If it doesn't get you in there, it comes back and ticks back and gets you in. So leave your limit order in there. It is a bit more scary when you go in on the bullish bar. Like if you drop in your limit order, you see the failure and you wait for that, but it's actually not a bad way to do it, to actually see the complete failure, drop your limit order in the place you need to get filled. If you don't get filled, you miss out, but a lot of times it'll tick back and get you in. So just remember that. And then we sort of micro channel down here, and then we do a pullback. So at this stage, whenever this is not a micro channel anymore, so we have got the pullback here. So you can just drop this line and turn this into a bigger channel. So you just pull outways until the swing. So that's your channel. You don't touch it then, you just leave it as is. And we get that lower high there and you go short there. I took all of these trades, that trade, and I even took the lower high here. And I even exited, I even took this trade here. So they're all pretty obvious. Anyway, so we overshoot this line again. So we're expecting a trading range. And we pull this down here. So we go like that. It's not necessary to keep these ranges in there. You will see other traders, they won't keep these ranges in there. I'm really just keeping them in there to show you that there's a range there, that we are going to get vacuum tested back up to the high. But this overshoot, yep, it goes down very strongly and it heads back up. So there is potential to go long here even, and I do that sometimes. But anyway, we head on up. We are in a downtrend, so we're looking for it to go short. So we hit the high again. You can just go short there again, where we've gone big down, big up, big down. It's far safer to go short at this point than to just go long at this point, because there's two very strong bearish bars here. It could potentially break out, overshoot, and head up, and you enter, and it could stop you out. Whereas if you wait for that second move, so you know you're in a range, it's gone down, you pull your orange range down, it heads back up, so you're expecting it to go back down. And second it breaks below there, you just drop your limit order in and hope to get filled, and you do, and you head on down. Again, this sort of starts off as a micro channel and it overshoots again here. So you draw in your little pocket here. You see the pullback occurring. So at this stage, you're just saying, oh, this could be a bigger channel. The channel part is starting from the spike. So generally you'll get that spike with all the same color bars, and then you'll transition into a trading range. This is what Al Brooks says. It's just what happens. It's how the market moves. And if you can see it, then that's good. It usually happens after an overshoot of that spike, and you get that rangy action that I'm always looking for. So I'm constantly looking for overshoots of micro channels, these little pockets to form, and then I play the battle in the smaller pocket. And that's what basically everyone is is looking at for scalping. And it also works for swing trades, as you can see. It just opens your eyes to what the game really is. And then you could go short here. There is enough room here. You are expecting 3 little touches. It's just a scalp. Maybe that's a 2-pip scalp there. When I say a scalp, I really mean like 1 bar. So get out your ATR and check the size of the bars for your session, or just start measuring them, you know, with your thing to see the size of the bars and get an understanding for how big you need your stop and how big a scalp really is. Anyway, we end up heading back here. There's not much more room here. We do overshoot here, so there is another little battle going on there. I haven't marked it, but we will put that in anyway. There wasn't really much to take in there. It's filling the whole range, so the whole channel. So there's no room. You always got to have room to the lows or highs when you're taking your trade. This is not a bad long entry even here. You can clearly see that it's pressed 3 times, and we do get a few bull bars in a row. But we're still looking to go short. We're in a downtrend, so we just watch this channel fail here. And we can go short there because we have had our 2 legs up. We've had 1 leg break, 2 legs failure, and we're heading on down again. But now I've gone big up, big down. We're probably in some sort of trading range. It comes back up, it double tops, so you can go short there again. You're only going short to the lows, and then we head on up again, and we double top for the final time. Maybe you go short there. It's just before the end of the day, end of the London session, and yeah, you can take that trade. We do go down and retest, so we do hit that 3rd press, but it happens in the US session, and it happens very strongly, and that's why I recommend just trading the London session if you're trading like me on a lower time frame, because you'll get stopped out. If you started your swing trade here and you just held it, you'd come back very disappointed at the end of the night when it takes all your money. So you're better off probably swinging down to the lows when you start to see resistance exiting. That's it.